Good morning. We're grateful that you came to UFirst Credit Union's webinar regarding reverse mortgages. Today, I hope that we'll answer a lot of your questions. Please type them in. Anytime that you see or have a question, just type them in. I'm here with Taylor Riley. My name is Don Taylor, and I just want to introduce reverse mortgages, and we'll go through some points, but again, please ask your questions. That will help you decide whether this is a good program for you and your family. So a reverse mortgage, that's something that will allow you to stay in your home and not have a mortgage payment. You'll need to continue to pay the maintenance, taxes, insurance on your own, but you will not have a current mortgage statement. You'll also be able to access equity in your home, cash, monthly payments if you need them, availability to a line of credit without making a mortgage payment as long as you stay in your home. You need to be at least 62 years old, both you and your spouse, on that. So let's get into the program, some of the details about it. I'll turn some time to Taylor to go through some of the myths.
Yeah, I'll go through that. First, I just want to introduce myself. My name is Taylor Riley. I'm a mortgage consultant here at the credit union. I've been at the credit union for about 8 years. I got my degree from the University of Utah in health promotion and education. I took a lot of geriatric classes. I love reverse mortgages. So I like to tell people that I'm very pro reverse mortgage for the right situation. It's not a one-size-fit-all type a loan program. So there are a lot of things that we like to dive into. And the first thing that we like to dive into is really the myths that come with reverse mortgages. You can Google this stuff. This is a doozy when you get online to start to see the things that are there. So here are some of the more common myths that we see in conversations that we have with people. So number one, you do not turn your home over to the bank or the credit union. A reverse mortgage works just like a regular mortgage. If you have a mortgage right now, if you look on the county, you put in your address for your tax notice, it'll show that you are the owner of the home. If you get a reverse mortgage, you will remain the owner of the home. A reverse mortgage just works reverse. Right now, you're making payments on the loan and your balance is decreasing. With a reverse mortgage, you're not making payments and interest is increasing. So the balance is going up each individual month. That's why it's called a reverse mortgage. There is a lien holder if you have a loan on your property, and that person is just, or that company or entity is just put in as the lien holder. That'll be the exact same way with the reverse mortgage. You will remain the owner of the home. Whoever owns the home will remain the owner of the home, and then there will be a lien put on the property. The second one, you can't leave or you can still leave your home to your heirs. So a lot of times people think that once you pass away that the home goes to the bank. That is not true. And so you can be able to leave it to your posterity, however you choose to do that. The individuals will have an opportunity to sell the home. They will have an opportunity to buy the home if they want to. They can be able to, if it's in the name of a trust, they can just go through the process. So you're kind of like you're refinancing the balance, but the person is purchasing the property. You can be able to leave that home to whoever you'd like to, and they can just take care of paying off the mortgage however they deem necessary to be able to do that. All right, your surviving spouse is not removed from the home if you die. So a lot of times people think that if you get a reverse mortgage and you pass away, that your wife or your spouse would be removed from the home. Now, there are situations where, and I've had this happen a couple times, where I've talked to somebody who's done a reverse mortgage and only one of the parties is over 62 years old. If the second party is not over 62 years old, then they're not eligible for a reverse mortgage. So that's where it's going to be important to be able to talk to somebody, a professional, about your current situation and what your goals are, long-term and short-term, and everything that goes along with that. There are numerous documents that your partner would have to sign if they're under the age of 62, that they know what's happening. They need to go with you to the financial counseling. It would be very difficult for you not to understand, in my opinion, that what the options were. So those are things that we would want to talk about so that we can be able to make sure that we're putting you in the best possible position that you're in at the moment and for the future with whatever your goals might be. All right. My heirs will be responsible for repaying the loan or they lose the house. That is accurate in a way, but the thing is they don't have to come up with the cash to be able to do it. They can be able to sell the home, and that's what most families will end up doing. If mom and dad pass away, you've got 4 kids, one of them or all of them are not going to take over the home. And so usually they'll go through and they'll do a process of getting rid of the contents in the home, and then they go through and they sell the home. Whether you have a reverse mortgage, no mortgage, or a regular mortgage, it's all going to be the same process of making sure that the home's cleaned out, going through the selling process and taking care of that aspect. So usually after the last individual passes away on the home, you have 6 months to be able to take care of that. If you need a little bit more time, the reverse mortgage companies, as long as you stay in contact with them, they'll work with you on that sort of thing. But that's usually the time frame that we typically see, is that you need to have everything wrapped up within a 6-month window. So I feel like they give you adequate amount of time to be able to go through the process that you need to with everything. 6 months is a good amount of time to be able to take care of everything. All right. I can't qualify because my home is not paid off. That's a big misconception that I see on a regular basis. Your home doesn't have to be paid off to be able to qualify for a reverse mortgage. As interest rates have increased, the percentage that you can be able to borrow against your home has decreased a little bit, but they still allow you to be able to, if the ratios are there for you, that we can be able to do a loan for you, even if you have a loan on the home right now. So the process for us to be able to find out what we can be able to do for you is that we just fill out some paperwork and we get it sent in. And usually within, what would you say, a couple hours that we get that back?
Yes.
So we can be able to have those pretty much same day, worst case scenario, next business day, where we can be able to go through those numbers and we can be able to say, okay, I owe X amount of dollars. My home is estimated to be worth Y. And we can be able to find out how much your closing costs would be. We can be able to find out how much would be available for you, what options we'd have to be able to take care of everything. One of the things that I've talked to a few people about is that they may not have enough equity to be able to do the reverse mortgage, so they have to come up with cash to be able to do that. We've worked with retirement planners to be able to help with that, where they take a one-time distribution from their retirement, which I know that the government has given flexibility with that stuff in recent years, so that people can be able to pay off the difference that they need to. So if you owe, in one of these situations, somebody owed $210,000 on their home, they only had to come to the table with about $25,000 to pay their home off, in terms of where they don't have to make a payment anymore. And so there's a lot of different ways that we can be able to put this together to be able to help them out. So every situation is different because every home value is different. Everybody owes a different dollar amount on their home. Your age will factor into it. So those are things that we need to go through and learn about, put that on paper, send that in so we can be able to find out exactly what we can and what we can't do. All right. The next thing, credit. My credit isn't good enough. One of the benefits of the reverse mortgage is that your credit does not play into what we can be able to lend for you. Now, there are guidelines depending if you've missed payments and stuff like that on what we possibly would have to do extra on top of what a regular reverse mortgage would be. But if you've got a 620 credit score and have missed some auto payments in the past or have had high credit card debt in the past, a reverse mortgage is a great product for you because they're not going to take that into account. So it doesn't, if you're worried about your credit, I wouldn't be worried about it. We'll overcome hurdles if we need to with where your credit is at. So we have to take that on a case-by-case situation.
Taylor, if there's enough equity in the home, they can also pay off those car loans and some of those credit cards. So that's an option too, and we can look at those options as well.
Absolutely, that's a great point. So there's lots of different ways that we could be able to put this together. Okay, I can't sell my home. So once you've done a reverse mortgage, a lot of times people think that they can't sell their home. Once again, that's not true. So you can be able to sell your home. It's just like any other mortgage at that time. You owe X amount of dollars at that time when you go to sell your home. And if you sell your home for more than what you owe on the home, then you get to keep the difference. So there isn't any situation where you wouldn't be able to sell your home. We would want to talk to you about that, ask you what your goals are in 3 years, what your goals are in 5 years, what your long-term plans are. Maybe a reverse mortgage isn't the best option for you. Maybe there's something else that we can be able to put together for you. I recently looked at doing a reverse mortgage for an individual that I've helped a few times over the past 5 or 6 years. And when I sat down and talked with him, he was looking at doing something drastically different than what I was thinking that he was doing. So he was trying to get funds to be able to build an auxiliary dwelling unit. And so there's just a lot of different ways that we can be able to put this stuff together to make sure that we can be able to accomplish your goals. Whatever they may be, let us know and we can be able to go through the situation and find out what's going to be best for you. The lender can foreclose on my home. That is, once again, not true. The lender cannot do that. There are contracts in place. Even if the value on the home tanks, there is protections for you, where as long as you stay in that home more than 6 months a year as your primary residence, you can be able to stay in that home. So there'd be no way that the financial institution or the bank could be able to foreclose on the property. Okay, last thing, I am not financially desperate, so it isn't a good product for me. Once again, this is just another tool in your belt with your mortgage that you could be able to use to be able to do whatever you're looking to do. I recently talked to somebody who owed about $40,000 on their home. Their home was worth about $600,000. Their child was actually the person who gave me a call initially, and we started talking about what they'd like to do. They had some plans of what they wanted to accomplish as a couple. One of them passed away. The surviving spouse really just wanted to live their life, but didn't know how they were going to do it because their financial situation had changed with the other person passing away. We were able to look at a reverse mortgage and go through the options where they could be able to get some cash, be able to increase their monthly cash flow so that they could be able to have a little bit of a better retirement time frame of what they were looking to do. So each situation is different of what you're trying to accomplish. This is just, as I said, another tool in your belt to be able to help you out.
Great, thank you, Taylor. So how does a reverse mortgage help me? So those were the myths that Taylor went through, but how does a reverse mortgage help? So it removes the need to make a principal and interest payment on your mortgage. That can be the difference of you staying in your home for as long as you want. Both you and your spouse, if one of you pass away, your spouse, if she's older than 62 and a half when she does get in, when they do originate the reverse mortgage, can stay in that home until they pass away or until they find the need to move out of the house. If you do move out of the house into a rest home or something like that for more than 6 months, that could start the process of being able to have to sell the home to pay off the reverse mortgage. So there are some conditions on how you stay in the home as well, how long you need to be in your home. It could also increase your monthly cash flow. It can give you monthly payments, a monthly settlement that you receive a certain amount of cash each month to help offset some of your needs. And you also have the possibility of getting a lump sum of money at closing, or even throughout the years as you go on and maybe need a new roof, need to do some maintenance on the home, the line of credit, if there's enough equity in the home, to be able to tap that and to take out additional money to do some maintenance on the home. Generally, they like to land anywhere from about 45 to 50% of the value of the home. So if the home, again, let's use the $600,000 value of the home, the maximum reverse mortgage is going to be roughly about $300,000, depending upon your age. The older you are, the more money that's going to be able to be available to you. One thing that we haven't talked about, you can also purchase a home using a reverse mortgage. Again, you're going to need a big down payment, at least maybe 50% of that, and that will typically come from the sale of an existing home, maybe a single family home, and you want to move into a condominium or something with less maintenance and less yard work. You can do that by coming up with a decent down payment, at least maybe 50%, depending upon your age, to buy another home. That's also a possibility through a reverse mortgage.
Yeah, there's a variety of ways that these could be able to help you. I know John and I both helped the same individual. There's an individual that we took care of with the reverse mortgage, and he's done two. The first reverse mortgage that I did for them, we really were just trying to help them with their monthly budget. They only had a couple $100 each individual month after they had paid all their bills. And so we were able to go through, we did a reverse mortgage for them, freed up probably after we paid off all of their debt and stuff, it was like $1,200–1,500 a month that we were able to free up for them. And then I know that they reached out to Dawn earlier this spring and did another reverse mortgage to be able to
access more.
Yeah,
the values of the home went up, so they were able to access more cash.
Yeah, and so it's really been a. I know that in talking with the husband about, he was really worried about his wife, and this weighed on her heavily. And so I worried that this would be something where she didn't have very much time, but this reverse mortgage really has changed their lives and what they've been able to do, the comfortability that they have, and just kind of moving forward in a more positive situation so that they could be able to enjoy their retirement.
You know, the thing that I enjoy doing for people is allowing them to stay in their home. Most of them have been in their homes for 40 years and they don't want to move. They don't want to move into a rest home. They want to stay at home. They're comfortable. They have family that can help. So, and that's the most rewarding part that I see, is I can let them do what they want in their own home if they so choose.
Yeah, there are countless studies and they all say the same thing, especially after a husband passes away, that thriving in the home or thriving in your later years, staying in the home is one of the most important things. And so that's what we're just trying to do is allow people to have the flexibility to do what they want to do. And if one of those things is stay in the home, then we can be able to help with that. All right. Next thing, is it hard to qualify? I don't believe that it's hard to qualify for a reverse mortgage. I do feel like reverse mortgages have more steps to be able to protect people. There's like financial class that you have to take prior to application and stuff like that. But I don't believe that it is more difficult to qualify. Reverse mortgages use different qualifications than traditional mortgages, and that has to do with income, value, and everything that goes along with that. So when we go through with a regular mortgage, you'll hear a lot of times debt to income ratio. They don't use a debt to income ratio with a reverse mortgage, and so they will use what's that thing called that we have to have, the not passive income,
reserve income.
Yes, reserve income. Thank you, Don. So you have to have enough reserve income depending on how many people that you have in your home. And so out west for one individual, I think it's like $712 is all the reserve income has to be.
For a two family home, it's $1,000.
Yeah, so it's very easy to qualify for a reverse mortgage. Very few times do people want to do a reverse mortgage and they can't financially qualify. So it's just a little bit different when it comes to the income. So if that's something that you're concerned with, let's have a conversation about it. Credit score doesn't matter. Once again, when we're going through and qualifying you, if you have a lower credit score, they're not going to hold that against you. They do look at your mortgage payments and making sure that those are on time. If you have struggled making your mortgage payments, you've been more than 30 days late multiple times, you still would be eligible. There may be some additional things that we have to do to get you qualified, but we still can be able to get you taken care of there. We do all the heavy lifting for you. Really, all you're going to need to do is meet with us the first time. We can be able to do that in person, or we can do it over the phone. You're going to need to go to the financial counseling class, and we'll take care of all of the other stuff. There's really, I can't think, if we can be able to do the application process and you bring your docs at the same time, I feel like we don't bother them nearly as much with these as we do other loans.
You know, you need to provide us verification of income, typically Social Security, state retirement, any source of income that you have during retirement, you need to verify. Insurance, current mortgage statements, show you know what you owe on your home. So it's, you know, there's some documentation, but again, we help you with anything we can.
Yeah.
Gather that information.
Yeah, the nice thing is that typically people with their pensions or retirement income, we can just give the provider a call, or we can get online and be able to get that stuff. So we may need a little bit of help, but we'll try and do as much heavy lifting as possible. All right, minimal income is needed. As Don said, 2 people, $1,000 of reserve income each individual month. They try and keep that as low as possible so people could be able to qualify. You got to be 62 or older. It used to be 62 and a half. I think they lowered it down to 62. Yeah, so 62 or older. As I said, if only one person in the home is over 62, you can be able to do it, but both parties can't be on the loan. So that's something we need to talk about. But if both people are over 62, we can easily be able to get this done for you. FHA appraisals are required. And so that's something where the home, there may be some little things that need to be fixed or corrected to be able to have an FHA appraisal pass. I know if you live in a condo development, the condo units need to be FHA approved. I've run into that a couple times. So there's just some things that the FHA appraisals require that we have to make sure we abide by.
Again, if you've got questions, please type them in. Let us know what we have. We're going through this pretty quickly, but we'd love to hear from you and answer your questions. So please remember to give us your questions, and we'll answer those as well. Maybe there's something specific that you have a question about. What are the downsides of a reverse mortgage? The total cost of a reverse mortgage is higher than a normal mortgage. One of the big expenses in that is an FHA insurance fee of about 2% of the value of your home, and that's typically the majority of the closing costs. It's typically double the cost of a normal mortgage. But again, and what that insurance premium does is insure the home in case your value tanks. No one comes after you while you're living in the home. No one comes after your heirs. Your heirs can just say, hey, I owe $400,000 on this reverse mortgage, or at least my parents did, and now the home's only worth $300,000. No one is going to come after them to collect the difference. That's what that insurance premium covers through FHA.
Well, and let me address that real quick, Don. So even if that happened, you still can be able to purchase the home. And what they make you do is they make you buy the home for 97% of the value of the home. So if in this situation, like Don said, if your mortgage balance is at $400,000 and the home's only worth $300,000, you could be able to buy that home for $291,000. So even with a reverse mortgage, if you end up borrowing or your balance exceeds what the value of the home is, you get to stay in it as long as you live there more than 6 months out of the year. Your mortgage insurance affords you to be able to do that, and then your heirs can be able to purchase the home for 97% of the value of the home. So the rest of it would just get written off.
So those closing costs will help protect you, protect your family, and most of the time it's money well spent to have you stay in your home.
Looks like we got a question, Don.
Okay, great.
Let's see. This comes from. From Michael. Is there a point when there can be no more money dispersed on the loan?
There can be, depends on how you use it, but also that line of credit. Say you get a line of credit on the reverse mortgage and you start out with $10,000 of a line of credit after you paid off mortgages or took a lump sum at closing. Also, as they're estimating that your home, they look at the trends in the home, of values in the home, and if that home increases in value, so does your line of credit as you go along. It's not a quick increase, but it does actually increase. The cases where I did a double reverse mortgage that one of Taylor's customers did before, their value went up like $200,000 in a couple of years because of the escalation in values in Salt Lake County. That they had to refinance that reverse mortgage.
Yeah.
But there are percentage increases every year depending upon what the values are. If the values are increasing in Salt Lake County, that line of credit will increase with you as well. The nice thing about those documents that we provide you through the proposal, it gives you a balance. An assumed mortgage of $100,000 that you owe on a mortgage that will be paid off. So your balance on your mortgage of the first year is $100,000. After not making payments for a year, it may go up to $110,000 the second year, but they assume values of your home will increase. They try and maintain at least 50% equity, that's your equity in your home, that you can do whatever you wish to. If you sell the home later, if you want to refinance out of the mortgage, reverse mortgage, or turn it over to your children, that they can refinance that reverse mortgage into a normal mortgage, and then they can move into that home as well.
But the thing is, even if the line of credit is capped and you've borrowed everything, so you may not have any additional money that's available for you to take out, but you still don't have to make your monthly mortgage payment.
Yep.
So that's where we need to make sure that we're setting this up properly so that you can be able to do all the things that you need to do long term. If you're thinking, I need to borrow $1,000 a month because to pay for everything, and you think that you're going to live in that home for the next 120 months, but we've only got $48,000 available, the math's not there. So we just need to make sure that we're having foresight to set everything up properly so that you can be able to do the things that you need to do long term with what we're trying to take care of.
And if you're struggling now to make a mortgage payment in retirement, that goes away. That principal and interest portion goes away. And so hopefully that will give you a lot more living expenses that you can live on as you go forward.
One of the things I typically see with the reverse mortgage is that individuals that have good credit, they start to put stuff on credit cards. And so they'll start to actually drown in the monthly payments that they have each individual month. So recently I was listening to our current president talk about net worth in this country and how it's never been higher. And while that is true, it doesn't help people in their month-to-month budget. If you've got $1 million in equity in your home, but you don't have any way to be able to access it, it really doesn't do you any good on a month-to-month basis. And that's where the reverse mortgage comes in for individuals 62 or older, is that they can actually be able to tap into that and help them with their monthly budget. And that was the whole purpose of why reverse mortgages were designed, to be able to help elderly tap into that equity and be able to help them with their month-to-month living expenses. Most of the time when I talk to people about reverse mortgages, they think, their thought process is, I spent all of this time and effort in my life paying my mortgage down, and now I'm basically just flushing that all away. And I have a hard time when people say that, because I think of it completely differently, that you spent all of that time and effort to pay that mortgage down so you could have financial flexibility at your most vulnerable point. And so when you are retired, even if your Social Security, if you want to get another, or you need to increase your income or something like that, it's not as easy as 1, 2, 3 to be able to go out and get a job. But what kind of job can you be able to do with physical ailments and everything else that could be able to be come along with that? So that's where the reverse mortgage can really be able to help you out with that, so that you can be able to basically piggyback on all of that work that you did earlier in your life when you had a little bit more flexibility to be able to do so.
So I want to touch on one more downside. The application process can be tedious, and that's why we're here, to help you. Again, if you have any questions, give us a call. This process typically takes, I think, a minimum of about 45 to 60 days. There's counseling you have to go through, appraisals, signing the loan documents, going to the title company and signing the final loan documents. So, and they're making sure that you understand this 100%. Through this counseling that you'll go through, you'll make a phone call, generally make a phone call, and it takes 45 minutes, 30 minutes to 45 minutes, and go through this process with a counselor that explains all these things in more detail. They're there to answer your questions. They're there to help you understand this process, to make sure that it fits your needs. We don't want to do it if it doesn't fit your needs. We'll go through those. We'll give you the pros and cons of doing the reverse mortgage, maybe staying pat with what you're doing. We'll look at that. The credit union here is interested in your financial well-being. We want to make sure that you come out of this and are happy with what's happened. There's a lot of negative things about reverse mortgages, and you need to understand the true facts behind it.
Well, I know the first thing that I do is I go through the cost scenario with the closing costs. They are expensive. And as I said, I tell people that I am pro reverse mortgage because I want people to understand where I'm coming from and my background of my education and just working in the financial sector for almost 20 years, and how it can be able to benefit people. So the last thing that I want is for somebody to feel helpless. That's why we have this program. When it was begged to be able to get it, and we got it about 5 years ago so that we really could be able to help everybody no matter what situation they're in. So there are other avenues that we could be able to help with, but this is just, as I said, another tool in our belt to be able to help people with what they're looking to do. And so we'll go through the pros and cons, as Don said. We'll order a proposal request so that you can be able to see everything that's available. There are protections in place for elderly individuals. If you receive a lump sum, let's say it's of $30,000, you're only going to get, what would you say, $18,000 of that in the first year, and they're going to hold the other half or the other portion till the second year. That's to help stop elderly abuse. So there's also a large lump sum of money. Sometimes people can be able to burn through that because they've never had that much money in their banking account at one time. So they do kind of set up some stop gaps to be able to help people. If the lump sum is not going to be the most beneficial for the individual, then they can be able to do monthly distributions. So there's lots of different ways that we could be able to set this up. No matter what situation that you're in, I think that we could be able to come up with a solution for your problem. We just need to make sure that we have a honest conversation about what's going on, where you're at, and how we can be able to help.
So the process. So we've talked about this proposal. Typically the first time I meet with someone, we meet over the phone. We talk about it. I've got a 3-page document that we complete. I'm going to ask your names, who's on title to the home, your birth dates, what kind of home you live in, what your objectives are. What do you want to achieve by getting this reverse mortgage? We're going to talk about income, the current balance on your mortgage. We're going to go through that to make sure that you qualify financially for this, that you have that ability to maintain the taxes and the insurance, because now you're going to need to pay those on your own instead of the current mortgage that you have. So we're going to go through all that to make sure that this works for you. And then we're going to get this proposal back again in a day or so, go through it with you, show you what the costs are going to be, show you what the remaining equity could be in your home after 10, 20 years of having this reverse mortgage. Then if you still want to proceed, that's when you start doing this counseling. And then at that point, you make an application. And it's a simple thing that we just, again, Taylor or I or the credit union can help you complete this application with the company that does these reverse mortgages. And you sign some documentation. That's when we start gathering income verification, insurance information, current mortgage company information. And then once they receive all that, they start immediately ordering the appraisal to see if it comes back stronger or around what you think. So this is it might be a longer process than a normal mortgage, but that's what we're here to help you do.
John, you should mention something real quick, and then we got a couple questions. You talked about this a few times, that people still have to pay their taxes and their insurance and their payment. And so when you're thinking about this, if you're just doing the quick math, if you've got a $1,500 payment each individual month for your mortgage, and your taxes, your county taxes, and your homeowner's insurance are tied into that, you can't think, oh, I'm just gonna be able to get rid of a $1,500 payment. So we need to go through and we need to calculate. Let's say that your taxes are $250 a month, your homeowner's insurance is $50 a month. So really what we're able to remove is $1,200. So when we're going through and looking at that, that's something that we need to take into account of what you'll still be paying each individual month so that we can make sure that we're setting you up for success.
See, this question comes from David. I may have missed it, but is there a interest rate tied to the reverse mortgage? Does it make sense to shop around between financial institutions?
There is an interest rate tied to the reverse mortgage. Typically, it's a variable interest rate. Those interest rates have gone up, but it's tied to a prime, and it can fluctuate each month. It might be important to you, but I think if it's more important to get rid of that current mortgage and give you living expenses, yes. And that's how your mortgage, so your mortgage, you don't have a monthly payment, but your balance on this reverse mortgage increases every month that you don't make a payment on it.
They do have fixed rate options though.
They
are a little bit more, they don't allow you to borrow as much.
They're more restrictive, but
Yes.
there is an option for a
Yeah.
fixed rate mortgage. But typically, yeah, there is an interest rate. Right now, the last thing I saw, they were in probably the high 4s. So they're still fairly decent in interest rate.
And then you asked about shopping around. Yeah, each financial institution will be a little bit different with their rates and stuff like that. So that's something that you can be able to take a look at if you wish to. When it comes down to this, for me, it's about trust more than anything else. You may be able to save yourself a little bit here and there, but with any mortgages, if you shop long enough, you can be able to find something that's a little bit cheaper. To me, really, our rates are competitive, our fees are competitive, but our professionalism is going to be top notch with being able to take care of you on these.
Brian asks, does interest accrue on a line of credit if you end up not using it?
No.
Interest only accrues on the amount you have borrowed.
So yeah, if you have a balance of X amount of dollars when you get the loan, it's going to accrue on that. If you have a line of credit that's available and you're not borrowing on that, then you won't pay any interest on that line of credit portion until you actually borrow on it. So if you do want to do the line of credit option and you don't have any, you're not pulling money off of it on a monthly basis, then your amount of interest is going to be less than if you had borrowed on it. So that's something that you can be able to keep in your back pocket.
So that's our presentation. We encourage you, if you have any more questions, to call in. Taylor's at the Brickyard office. I'm at the Cottonwood office. Or you can call in our number to the credit union, 801-481-8840, and that gets you to the mortgage department and ask to talk to Taylor or I, Don Taylor, about a reverse mortgage, or just say, hey, we'll get you to whoever you'll need to talk to. Taylor or I are the ones that do them at the credit union now. Maybe more will come up, but we'd love to talk to you. We'd love to spend some time with you, sit down, or just talk to you over the phone. Let's make it easy for you and get some basic questions answered for you.
Absolutely. I'm available on my cell phone till 11 p.m. 7 days a week. So if you need something, feel free to be able to reach out. As Don said, I'm at the Brickyard office. He's at the Cottonwood branch. You can call the main hotline, and one of the mortgage consultants will be able to pick up and get you taken care of.